Welcome back. Data point of the day. Weekly jobless claims hitting their lowest level in a month, latest sign of strength in the labor market, and another potential headwind to further Fed rate cuts in the near term. Joining me now to talk about it is Evercore founder and senior chairman Roger Altman. Roger, great to see you. Hey, so what do you make of what the Fed is going to do next year? Market threw a fit after the last news conference.
I think the Fed, Sarah, is going to proceed cautiously, at least at the beginning of 2025, for two or three reasons. And I would add that the pivot that it just effectively made down to 2 cuts from a market expected 4 illustrates, I think, the degree of caution they're going to bring to this. I would think those 2 cuts would be smallish, 25 basis points each. I would doubt that the first one would come at the very, very beginning of the year. The reason I think the Fed will be cautious is for partly what you just said. Growth has been stronger than expected. A year ago, the general expectation was 1.5% real growth for this year. It's turned out to be 2.5% in round numbers. And labor markets, as you just said, continue to be quite strong. The unemployment rate's 4.2%. Monthly job creation rate continuing to be healthy, and so forth. The other reason I think the Fed will be cautious is the Trump agenda. How much of it will be implemented, particularly tariffs on the one hand, deportations on the other. We've all seen estimates as to what the implementation of 25% tariffs, for example, on just Mexican and Canadian exports to the U.S. would be, give or take 0.5 point on the inflation rate. That's not trivial. So I think the Fed is going to be cautious, at least at the beginning of the year. As the year goes on, exactly what happens will depend just on the data that we all see as it unfolds.
I'm glad you brought up the Trump administration, Roger. I know you were a Kamala supporter, vocal about that. But don't you think the Trump administration is going to be great for your business if M&A comes roaring back as the market expects?
It could be. And look, like every other American, I want President Trump to be successful. And I want this remarkable economy. And by the way, the latest evidence is that holiday sales were quite strong. Yep. The MasterCard data, at least. And I want this great economy to continue. It's been just remarkable, as Powell himself described just a few days ago. I think he used that word, actually, remarkable. So we want that to continue. And I'm not criticizing any aspect of the Trump agenda. I'm just saying that if you're the Fed, you're going to be careful as to which of it gets implemented in full and which doesn't, and what economic and inflation effects that may have.
What are you hearing from other CEOs that you're talking to, clients, when it comes to deal making and just in general, the desire to take risk with a potentially more pro-growth agenda coming from this White House? This next
well,
one.
I think there has been quite a bit of optimism through most of 2024, including well before the election. I think that optimism continues. And it's based on real things. It's based on the strength of the economy, the growth rate, consumer spending, which is, after all, 3/4 of our economy, continue to be quite strong. And so, yes, I think there's a lot of optimism. And corporate earnings, of course, continue to be pretty strong, more beats than misses and so on. So I think there is a lot of optimism as far as M&A is concerned. It should be a good year in 2025. The types of early indicators we look at, engagement letters, conflict checks, things like that, are all pretty positive. Although you can't see that far down the road on M&A, at least I can't. But it should be a good year.
I mean, we did this survey, a Delivering Alpha survey here at CNBC, where we asked people where they stand on President-elect Trump's economic policies. And this was the response that stood out to me because it was the biggest majority we've seen. 71% saying he'd be great for the economy and the markets. 29% say his policies won't be good for the economy and the markets. Do you agree with that?
Well, one of the advantages that President Trump has, and it's really fascinating, is that he often can signal something he wants to do and have a counterparty concede the point, or at least some of the point, before he ever even does it. Because he's a strong figure and he's unpredictable. So that gives him a lot of advantages. And you see, for example, that in geopolitics at the moment, Iran, for example. So I think there's good basis for optimism, and I think at least 2025 should start off quite strong.